Hi, this is Jason here from the Turn Pro Trader blog, and today we're going to look at the US dollar yen 4-hour chart, and we're going to be looking for divergence and trade bounces off the most important Fibonacci levels, as I was taught many moons ago back in 2006. Okay, so let's find the divergence first. Okay, so we're going to get our little draw line tool. We're going to go from this high to this higher high, and from this mountain peak down to this smaller mountain peak down here. So, like they say, when you have divergence on the chart, you have a high and a higher high, and you have a high on the indicator of choice, and then a lower high on your indicator. Okay, so you can use many different tools to draw your divergence. Some people use the RSI, they use the stochastic, they use the MACD 2 line or the regular MACD. I think there's even other indicators you can find divergence on. But I found that the easiest way to find it is using the OSMA tool. And that's my favorite tool of choice, and that's what I use. And it works just beautifully. So anyway, right up here, you would have got in the trade short, because this is regular divergence we're talking about here. And you would have got short right here in the opening of this candle. And I myself would put my stop up here after they'd taken out the stops. And as you can see, it went down about 91 pips, okay? Which is a beautiful thing. So now, let's put the Fibonacci tool on it, and we'll see what that gave us. So we take it from the low, and we bring it to the high, right up there, okay? So we can see all our levels. So as you can see, what did it do? It came down to the 38.2. So if you were a buyer, doing counter trend trading, you would be buying as close as you possibly could get to the 38.2. And did it go up? It sure did. Went up about 40 pips. Then what did it do? It came and it crossed down and came all the way down here. And what did it bounce off of, ladies and gentlemen? Exactly to the pip, baby. We're talking the 78.6 Fibonacci retracement. Okay, and the most important levels, don't forget, 23.6 doesn't mean diddly. Diddly do. For some, they might think it means something, but not to the professional Fibonacci traders. Okay, your important levels is the 38.2, the 50, and then the 61, and then the 78 is, you're like, okay, if it hits there, then that's it. It's done. The trend has changed. If you were long up here somewhere and it comes down and hits the 78.6, well, you can kiss that trade goodbye if you're still holding on, because you should have got out. So anyway, the two most important levels are the 38.2 and the 61.8. So anyway, as you can see, that's what's happened with the Fibonacci. The question is, will it go back up from here, or will it continue down and go lower and take out these lows from 2 weeks ago? Well, we have to wait and see. Thanks for listening. Once again, this is Jason Sweezy from the Turn Pro Trader blog. Have a great day.